When you invest in a stock, let's look at it like it's real estate. I'm the buyer of a property. You're the seller of a property. In order for you to give me the property, I have to give you cash. So the cash leaves my account, goes to you, and in exchange, you give me the property. So let's say the property is worth $100,000. I don't have $100,000. I have $100,000 worth of an asset, which is that property. So when you buy stock in a company, the stock is considered equity in a business. So the confusing part is that we can't touch it. But if you really think about it, how do you touch a business? Like, you can touch the CEO, you can touch the building, but you can't touch the business, and that's what's called equity. I think that's why we have an issue with investing, because we can't physically touch it. It doesn't feel safe to us, right? Now, the same thing works when you buy a stock. You'll transfer the money into the brokerage account so that you can buy the stock. You'll buy the stock, the cash goes away, and then in comes the asset, right? So you own that asset, which is the stock, right? Now let's go back to that property. The property can go up and down in value. So one day the property can be worth $150,000, right? The same thing happens to your stock. The stock price moves a little bit faster because the market's open from 9:30 to 4 p.m., but it can move in price. It's not until you sell the stock. So let's go back to the house. It's not until I sell the property to another buyer that I then get the cash. So the same way you literally can press buy in your brokerage account, the money will go out, the asset will come in. You can do the exact same thing. You can click sell, so you can sell the shares that you purchased. It'll go to the stock market, and then boom, you'll get the cash. And then you take that cash and you can transfer it to your checking account, and that's how you can save it. But holding the stock, holding the asset, is allowing you to hold equity in a company, but it's growing. You don't have to do anything, just like the property. You're not doing anything. It just sits there, and because you own that asset, it has the ability to grow. It's not until you sell out of it that you then get the cash. So when you hear like a Jay-Z and Beyonce are worth $1 billion, they don't have $1 billion in cash. They have $1 billion worth of assets. Some of it can be cash, but for example, title or their music rights or property that they own or businesses that they invest in, that is the asset. And the bigger that asset gets, the bigger that company gets, the higher the value goes. And that value is attached to your net worth because it's yours.